Cheers to a new and beautiful week, retail trading team. This is Mastro coming to you live with your routine briefing. And we are doing things a little bit differently today. So I hope you had a lovely 3-day weekend. One more of those coming up, and then we get a little break until Labor Day. If you are like me, you do not relish these 3-day weekends because it prevents us from getting involved in this beautiful thing that we call stock market. So speaking of the beautiful thing we call stock market, really nice tape so far today. So if you just look at my screen here, I am sharing my attempt to try to get filled in my runners here. I did 3 trades today. So first I took a short. I'll show you my trade fills, but it's going to be pretty ugly. Stand by. That. So yeah, that's that's what I did today. So it looks pretty weird because this is MNQ. I'm trying to figure out the runner, so I usually do that the one lot with NQ. And so what I was trying to do there is do that in MNQ, just using 12 and then leaving 2 on. But I did have that immediate technical issue, which is why my runner is all the way up here. I lost it after the fill because we never did return to that price. So I'm going to stick with that NQ, and just what I'm going to do here for that runner is just move it into MNQ. So standard execution on the NQ chart and then move it into MNQ. So why am I talking so much about NQ? If you noticed last week, I really pivoted into the NQs versus the ES, and that is a result of, well, last week I was pretty close to finishing the back test, and then this weekend I did finally finish it. So what does it show? Well, I'm going to go ahead and drag it over here for now. This is what we got going on. Just enter today's info in there. I've ran through it a few times. The ones that are highlighted, I'm going to go through again to make sure there's no confirmation bias. The way that I handled this back test is if there is any chance that I would lose, I would always take the loss. So I would think that the results are actually slightly better than reflected here. Yeah, these results are pretty fantastic, I would say. So this is NQ per one lot entry, and this is kind of what we have for the entire year. So I've gone through this several times. Like I said, I want to go through it one more time, but I am definitely confident enough in the results here to talk about it on our lovely routine briefing here. So you can access this. This is on that warm-up document, which you'll also see is changed as a result of these results. And so we're just going to talk about this the majority of the day today. So just real quick first, I'm going to talk about the QQQ levels, just kind of get that out of the way, and then we'll talk more about the strategy and exactly what's going on here. So yes, I've moved from SPY to QQQ. Was that 5 Qs? I don't know. Just because these results are undeniably really everything a day trader needs. And so really for the purpose of these briefings and this channel, at least for now, is we're focused on day trading. And so I want to give you what I find to be the best strategy day trading. So I've done many back tests. Those of you who know me, especially OJ, know that I've spent pretty much all my free time. When I say pretty much, I'm not exaggerating, back testing various strategies, ES, NQ, trending strategies, momentum strategies, sniping strategies, a lot of different potential combinations, some of which you can see along the bottom here. I've been slowly archiving and deleting, and what I've come to is the superiority of NQ for raw day trading. So what I'm going to do is just kind of keep it simple here. We're going to focus on QQQ on this channel for a while, and then as I move back into the option world, once we got this going on, we'll talk a little bit about SPY some more. But I think the 5 of you who do watch are mainly day traders, and so I think it's relevant to kind of talk mostly about day trading. So these QQQ levels, by the way, do correspond very often to important inflections on the SPY chart as well. So if you are looking for SPY, obviously you can just pop in the chat as well if you're watching it live, and I'll be happy to talk about the various SPY levels. But for the purposes of this briefing, we're going to be talking about QQQ. So these are the main levels. You can see that in the warm-up document, so let's talk about them. I'm going to go ahead and pull up the daily chart here. My runner would now be a little bit more than 100 points running, so that's we call annoying, and that's what happens sometimes when you test stuff out. But anyways, I digress. So let's check out that weekly chart, what's going on here. So tentatively, that little arrow comes from the daily. I'm going to get rid of that, and we'll talk about it in a sec. Tentatively, last week we put in that swing high. So again, this is going to apply to the SPY chart as well. This is a very highly correlated pair. So again, this is QQQ terms, but they do match what's going on in the SPY as well. So tentatively last week he did put in that swing high, so we'll see what happens there. That is a very bullish candle, so that's colored red, yet the real body of that candle is actually green if you look at it just on your standard candlestick chart. I just have that colored red just because that's what I do with those swing highs and swing lows. So swing low would be green, swing high would be red. And what we're kind of doing now, we're trying to retrace. And so those yellow lines are going to correspond to the most important horizontals, yet the first few levels in this chart are all going to be those yellow horizontals. So you'll see them more clearly on the daily. Right now, the most important level I think there is that high, and then the second most important level would be that low. That one in the middle there is just the 3-day swing. So we'll see what happens on the QQQ daily chart when we get around there. Again, it's the same story that we've been talking about in the SPY chart. It's a tale of two things. So first being that fourth standard deviation VWAP band, which we are currently consolidating on top of, and the second being where we are relative to that volume profile. So I'm just going to show you what I mean, because I talked about this several times last week, what happens when you get outside these bands, these VWAP bands. It's a little more clean in the SPY chart, so this is one area I would recommend you check it out in the SPY, opposed to the NQ, because you can see plenty of times in the NQ we actually just consolidated all along the top here. So in fact, I'm going to go ahead and switch to SPY right now so we can look at that, because that is an important note. Stand by. Let's pull that up. Okay. So I'm going to go ahead and just clean this off just so we can look solely at that 4 standard deviation VWAP. We'll leave those gaps in the chart there. Okay. So if you go back the entire length of the SPY data I have, which goes back to 2011, watch what happens anytime that you get either beyond the top side or the bottom side. So oftentimes, most of the time, you just touch it and kind of correct, touch it and kind of correct. Every once in a while, you'll get a bit of consolidation, but you almost always have that correction. So even here, consolidated for a couple weeks or about a month on top, boom, steep correction. Now keep in mind this is 2014, so even though it doesn't look like much of a correction percentage-wise, quite large. Again here, several weeks, kind of consolidate, kind of beyond it, little test, beyond it again, correction. Touch, correction, touch, correction. Same thing on the bottom side. Let's go a little more toward recent history so the candles make some more sense. So if you remember 2018, when we had the steep correction, first one, Volmageddon, popped outside that band, correction. We tried to trend outside that band later in the year, and then you had that steep end of year correction. So you can see in 2020 is a little tough because everything happened so early in the year, so the bands didn't really have time to draw, I think, reasonably. Yet, once again, let's look at 2020. Or excuse me, 2022, the bear market. Correction. Pop outside, correction. Pop outside, correction. Pop outside, correction. And so here we are. So that's what I'm talking about. It's a little cleaner on the daily. If you want to pull that up yourself, it's very simple, especially you Sierra chart users. Just put on the standard VWAP study. I'll even show you it. That volume weighted average price study. Go to settings, subgraphs. I ignore everything because all I care about is that top band 4, which is the 4 standard deviation. Just put that on there, and you can look at it on the SPY chart here. Very clean, much cleaner on the daily, like I said, just because of how the data is collected, I guess. That would be a question for the quants, but you can see every time we pop outside it, we eventually correct. Once in a while, it's notable that you do have several weeks outside it, but really the longer that you spend outside it, the steeper that correction. Again, trending outside it, this was quite a steep correction. This was, I think, the fiscal cliff, somewhere around there. So yeah, so really reliable. Again, we can definitely hang out outside it for a while, but eventually there is a correction. So that's what I've been talking about. I just wanted to, I've showed you that in the slides, but I just kind of wanted to expand upon that a little bit, and so you can see what I mean. So again, that'll be the one time we talk about the Qs, or excuse me, the SPY differently instead of rather the Qs because of that VWAP behavior. So that's what we got going on there. Let's go move to the daily chart. Okay. So again, dramatically outside the bands. Let's see if this is a little cleaner here. Really not so much because you do have this period in 2020 where QQQs just outperformed so much that we never really pop back inside. So I think it's much more of a clean indicator for that SPY chart than QQQ. So we're not going to focus too much on that. We're going to focus that we're outside it, showing overextension, but the reliability of the pattern is definitely more clear in the SPY. So I don't know if I'm going to say that 50 more times before ending this video, but I just wanted to make that pretty clear. So let's talk about our close levels and what's going on here. So again, 3-day swing, I'm actually going to move up here as we navigate today's action. So we're going to move that middle line that you saw on that other weekly chart is now going to be at, and I'll correct this in the document right now, is going to be at 364, almost right on the dot. So instead of 360, we're going to be looking at 364 a little more closely. And I think that's going to be a really important level, by the way, going forward. If we lose that 364 area, I think that's when we can see that correction back toward that volume, or excuse me, that value area high. So again, that on the Qs here is going to be around 340. I highly recommend you go check out that warm document if you want to see how the volume profile behaves, regardless of underlying those 5 setups. And I'll just kind of bring it over here real quick. These 5 setups here are pretty reliable, so go ahead and check that out. So right now we are in imbalance again. Intraday as a day trader, it doesn't really matter. We can take both sides. Yeah, just keep in mind the bulls do have strong control of this market. Although we may dip intraday, and in fact today's pretty nice looking red day so far. Despite that, keep in mind the bulls come at any moment because we are still in a state of imbalance on that weekly volume profile, which comes from the high. So that is really the major thing to point out there. And I am going to go back to the fun stuff. So again, these levels stay in the chart. I'll keep them updated in that warm-up document. You know the deal. So let's talk about this strategy because, like I said, that is the key takeaway from this briefing today. So if you go to the routine day trading document here, and you just scroll past the statistic bank, which I'm in progress there, don't mind that too much. Go check out Occam, another cute little acronym, playing off Occam's razor, which is just finding the simplest solution. In this case, to day trading, which I really think, at least for me, is a strategy so far. So again, working on the runner component, but you can just really see what I backtested there. In the backtest, I did not even look at runners, and you still can see these results. If we go back to them here, pretty excellent. So yes, in one account, cool, but not amazing. But really, the power of this and what got me going in the first place on these futures strategies is the potential you have if you're using multiple accounts. So I'm going to talk a little bit more about this. I'll be plugging the Apex Trader funding thing for a while here as time goes on. But what you really can see, and I'll show you what just today's results, just to kind of give you a visual of that. So when you have these funded trading accounts, and I just started this, so let's see how many are here so far. These 7 I'm going to show you are not live. So at least for these funded accounts, this is still fake money. You have to qualify at a certain point. But if you look at the performance of these funded accounts today, you can see net P&L between 680, just because keep in mind slippage and various technical issues. So between 680-ish and 815 on the day. Yet, if you multiply that by, I have 7 going here right now, you can see what that comes out to on that net P&L. And you can have a maximum of 20 on these. So I have 1 funded so far. I have 1 funded account on Apex, and I'm working on this additional 7. The goal is eventually 20. And then what I'm going to do personally is move all my personal funds. I'm using EdgeClear right now as my Sierra broker. You move those just into probably those more traditional option strategies and let these funded accounts pay for the futures. So the really tremendous thing about this is you can have a maximum of 20. By the way, you have to definitely work into it because today's perfect example for me at least. I saw the technical issues, so you want to ease into it and make sure that you have everything. Um, you have contingencies for everything on the technical side. Yet multiply that 41 number by 20, and that's where you're looking at for the strategy so far in the year. Less commissions and fees, but still, even with commissions and fees, that's a pretty nice number. So that is just kind of what I'm looking at here, and that strategy you can see in this routine day trading document, which I will update, by the way, as I figure out the proper way to navigate those runners. So that's what we're going to be doing with this channel. Finally completed that back test, like I said. It's been going on for literally months now, and so this is what we're going to focus on for those future strategies, just for the foreseeable future. And as I grow, so I think another interesting thing about this for anybody watching is I am starting off basically, I have the one funded account, but more or less starting off from scratch on these funded accounts. So you will be able to see that journey and hopefully participate, and we'll see if we can't make some cool money day trading these futures. So yeah, that's what I got going on. A little bit long and unstructured today, just because I wanted to talk about that. We'll go back to our nice, short, concise, and organized briefings starting again tomorrow. But I just wanted to talk about what we got going on here with those new mechanics and why we're on this channel, why the routine trader guy is switching to mainly QQQ. And so that's what we got as we continue that sell off. Let's see what we got going here as we continue selling off, and that's what. Sorry, I'm stuttering. I think it's pretty funny that I lost that runner the one day that the runner didn't get put on, but it's okay. So the link just to the general resources are below, OJ. I need to organize a little better. As you can tell from the various rambling and stuff today, I just kind of wanted to get everything out there, talk about why the move is going from the QQQ. But the link to the warm-up document, the link to that routine day trading template or mechanics, whatever you want to call it, is in the description of this video. And I will be plugging, like I said, Apex down there as well as time goes on. So yeah, I think that's good for today. It's been a nice long video, and I thank you for hanging in there with me today. Like I said, a lot more rambling than normal. Yeah, just wanted to kind of explain what's going on. So all the links in the description of the video as always, and I will follow up with the newsletter, which is renamed once again. So one of these days I'll settle on a name, but I'm going to put this briefing in that newsletter as well as I'm going to put some slides together so it's a little more clean. So we'll get that out. And yeah, so if you found any of this information useful, if you hung in there with me, thank you, Dig Dug and Mr. Juiceball, for doing so. I would appreciate, or not necessarily liking this video, but I appreciate you too if you like the video. But I appreciate anybody who liked the video, just to help with that YouTube algorithm. And I would also appreciate any engagement in the comment section or on the Twitters. So yes, OJ, I think it actually might be a nice little double. My mic turned off, telling me I've been running my mouth too long. Yeah, hey, why not buy the dip? I'm personally finished rather. Yet I think there's still a lot of money to be had. It's really nice looking tape today. So just to kind of review what happened real quick before we go, why is it so nice? Well, I think you kind of saw that perfect ABCD setup. So A to B, B to C, C to D. And now if that's how we perform, especially if we recapture the overnight low, we're already recapturing the underside of that descending triangle, really more of a channel. So we'll say the underside of that channel, just kind of perfect play for at least a nice little scalp that you like there, OJ. So we will see what happens. And besides that, I am going to be trading live, by the way, these briefings. Just when the market starts, I'm going to try to get these finished early in a day. And like I said, be much more organized going forward. But if you want to come hang out live as we trade in the morning, I will be doing so between 9:30 and either, I don't know, 9:35 if that opening trade I like to take works out, or by the latest 11. So come hang out there, or here rather, if that so interests you. So thanks for hanging out. Congratulations on your fleet of jet skis, Mr. Juiceball. And I thank you for your attention. Particularly, thank you, Dig Dug and Mr. Juiceball, for hanging out, bearing with me through the rambling today. And I hope to see you tomorrow, and stay classy until then.